Well, welcome back to another episode of the Financially Free Journey podcast, where we aim to dispel the seemingly complex topic of personal finances, money management, debt, savings, investing, and even retirement. And today we are going to focus in on investing. I've brought on a very special guest, Charlotte. She has a company called Johns Creek Capital, and they currently have 22 park investments with a total investor subscription amount of, get this guys, over $4.2 million. So Charlotte herself has also created over $500,000 in asset value in the past 12 months. So a phenomenal track record, someone who's practicing what she preaches. So Charlotte, welcome to the show today. How are you doing?
I'm doing well. Thank you for having me.
Well, you know what? I've been really excited for this conversation because I think you have a really interesting background, and I want to dig in a little bit into your story and your journey of bringing you to this point of incredible success.
Well, thank you. Thank you very much for the kind words. So just a little bit of background on myself. I came to the United States for high school when I was 16. I came alone without my parents. So my parents, they're from China, and they've been here once for my college graduation, but other than that, they have been in the home country. So I came alone. I did not know much English, did not know much about anything. So I kind of started from scratch and had to push myself up with the very little resources I had. I stayed with the host family while I finished high school in Pennsylvania, and I was very fortunate to get into Georgia Institute of Technology here in Georgia. Very good engineer, one of the top engineering schools, and that was what brought me to Georgia. And I finished my degree at Georgia Tech with a Bachelor of Science in Business Administration, and that's what brought me here physically. And I've always been interested in business and startups and entrepreneurship. So that's why after working a corporate job for about a year and a half, I quit my job to take the leap into real estate full time. The reason for that is because I had already invested in real estate while I took my first job on the side because I've always been interested in real estate, and I've yielded pretty good returns while I was doing it on the side. And I was thinking, why not do this full time? And as I was looking into a pretty good opportunity. So as I took the jump, it was a big risk for me because my husband at the time was still in college and he didn't have an income, and I was quitting my job. So the very little money that we saved up and the little 401k we put aside is nothing to live on, let alone launch a venture. But I took a calculated risk and decided to take the leap into entrepreneurship. So in searching for an opportunity, I considered single family homes, apartment buildings, and commercial buildings, offices, and different types of real estate investing. But I decided that I wanted to do mobile home parks because at the time in 2019, when I started, mobile home park was a very much ignored section. And I'm a big believer in escaping competition and not to be in a market that's extremely heated where everyone is competing for one thing. That way, there's just simply not enough pie, not enough meat on the bone for the people that's competing for it. So I decided to go with the kind of a cold market of mobile home parks. This turns out to be the best decision I've ever made, one of the best decisions I've ever made because not everybody was talking about it. It was relatively easier to get into at the time. And I was able to acquire parks a lot of times on seller financing and at very attractive terms and prices for those parks. So I decided to really scale and take on investors. And I think I was able to meet a lot of good people and investors who are interested in this very niche. market, and where we focus on is small to medium level mobile home parks. That is even a small niche within the niche already niche market of mobile home park, and it
It's an
really just took off.
inception. It's an inception of niches, right? It's like three layers deep, you know. But
Exactly.
that's where the what do they say? The riches is in the niches, right? So I mean that
That's great. Yeah,
you identified
exactly.
that. So
Exactly, exactly. So our goal is to monopolize a small niche and then expand from there. So that's what really led to us today, one park after another. And we started acquiring in 2019, and Johnsford Capital was officially established with my partner in early 2020. But I think about a year and a half later today, we grew to the 2022 parks and $4.2 million asset under management. I have no, not really a lot of network, given that I don't have any family member here in the States. But it's really just started from scratch and bootstrapped my way to where I have today. And right now we have a few deals in the pipeline. So we're just really looking to scale and grow rapidly as the market's growing.
well, it's inspiring because I just think about that myself, putting myself in your shoes at 16 years old, moving to a foreign country, not having one family member that's literally within the same day as you. So
Yeah.
and to be able to be successful and to, as you said, bootstrap a multi-million dollar business and identifying such a unique investment opportunity. And it seems like only recently in the past couple of years, a lot of, you've heard a lot more people talking about investing in mobile home parks. But before that, it was like no one talked about that. That wasn't a thing. It wasn't a fad. And so it seems like it really has gained momentum. So when it comes to investing in mobile home parks, because a lot of the listeners are very interested in getting involved in real estate investing, but your mind is automatically drawn to single family homes, becoming a landlord, right? Or maybe multi units like apartment buildings. So why mobile home parks? Like, what does the ROI look like on investing in a park versus other real estate ventures?
Right. So right now, what we offer at Johns Creek Capital for our investors for mobile home parks is an internal rate of return of 15% to 20% over a year, over the 3 to 5 years whole time. We're actually in the process of exiting a mobile home park that we acquired yet last year, just 1.3 years ago. Really, it's just a year and a few months ago that we're exiting, and we're selling it for more $200,000 more than what we bought it for, and
Oh,
let
wow.
alone, and yeah, more than that actually. So it's extremely. So we got in at a good time. So I think the reason that we chose mobile home park is because of the niche, the market, and it's really a diamond in the rough that a lot of people don't give it credit for, and it has the stigma of this trailer park reputation where people tend to stay away from, but that is where the money is to be made. And I think if you look at those luxurious buildings and single family home, it looks fine and dandy on the outside and fancy on the outside, but in reality, in my experience, they are often too expensive, and the cap rate is way too low to generate any kind of good returns if you want to grow your wealth. I think like I said again, it's just a niche where competition is not as heated as in, let's say, single family home. When the barrier of entry or people are paying attention to it too much, there's just not enough meat on the bone for everybody.
Well, and that's such a good point that you brought up about there's not enough meat on the bone, so to say. And when you look at single family homes and the cap rate, it's like, is the investment and also the time and the effort going to be worth it, especially if you're not buying the property outright, as a cash buyer, which most people aren't. They're leveraging debt to do that, to build a real estate portfolio. And so that leads me to a question: is what's the typical cap rate for mobile home parks? What does that look like?
Right. So typically, we only acquire mobile home parks at the 8% cap rate and above. When we
Wow.
started in 2019, we look at something usually above 10 cap. Now, it depends on the area, obviously, and depends on the size of the park. And
Right.
on the West Coast, you can find anything, probably cap rate just as compressed as it is in multifamily. But I think with the right deal, the right move, and with the right deal making techniques, you can negotiate cap rates, a lot higher than what you would say in
Yeah.
other asset classes. And then something that we really look at is the spread. What that means is the cap rate difference between the cap rate and the interest rate of the loan that you're getting. For example, if you're getting a loan at 4% interest rate, you would want to have at least about 8% cap rate, 3 to 4 percentage of spread between those two to yield any kind of meaningful return for yourself and for your investors.
Very, very important to take into account if you're leveraging debt and you're paying an interest rate. And right now is a great time to be able to leverage debt if it makes sense for your finances because interest rates are just so incredibly low. It's like now is the time to expand if you're,
Mhm.
doing something like this. So looking at the spread is really where like the magic happens. It sounds like.
Spread is so important. Yeah, the most important thing in life.
Yeah,
Yeah,
you're like that. That is my life. That
yeah,
is how I breathe. Is spread.
exactly.
And just to reiterate for the listeners again, if they're not familiar with that, the spread is the difference between the interest rate that you're paying on the mortgage or the commercial loan that you're taking out to acquire the real estate versus the cap rate itself, and that's where the money happens. This show is all about building financial freedom, and we all know that financial freedom happens by building cash flowing assets and passive income because we truly want time freedom. So how is getting started in investing, mobile home parks, how does that help build this long-term passive income? Like, can you paint that picture for us?
Right. So long term, I think for obviously there's the monthly cash flow aspect of investing in mobile home parks, and the stability of mobile home parks lies in the fact that it is more of a parking lot business, and then the fact that mobile homes are extremely hard to move, and 95% of the homes that were moved into a mobile home park never leave the site that it was located in. So it is extremely hard to move it away, and that means that the home is most likely to stay there, and the tenants have a lot of deterrence before they they can make the decision to move. So that's what makes the cash flow more stable. And there are obviously risks involved in mobile home park, especially throughout the pandemic. How we handled the non-payment issue, because when times get really tough, people have hard time paying, and people don't have lose their jobs during the pandemic. They have hard time paying their lot rent, especially under the eviction moratorium, where they feel like tenants have this misconception that they do not need to pay rent, and we cannot evict them. So that was really difficult. And the way that we handled that was that we applied on the tenant's behalf for state level, county level, even sometimes city level rental assistance programs. Even with ministries, we received a lot of rental assistance funds to get the tenants caught up on rent. So when the times are good, um, there will be tenants will pay on time, no problem. But when the times are bad, even though there are non-payment issues, there are remedies to go against them. Also, there will be more people interested in looking into a less expensive housing option, because they can't afford the higher end apartment buildings or house mortgages. During economic hardships, you will receive more cost to look for affordable housing option. So long term, you will have the benefit of cash flow, and you will also have tax advantages, especially during the first year, because the depreciation on mobile home parks is generally shorter. Is actually shorter than multifamily, which is almost half the years of the schedule where they get depreciated. So you get a big chunk of write-off. You have other passive income for mobile home parks. So that's another advantage. And at the end of the day, long term, if you want to build wealth, and after hold it for a few years, you can always sell the park, where you will receive your money back, and you will have a lot of capital gains at the end with proceeds. So those are the three main benefits of the long-term wise investing in mobile home parks.
Yeah, I mean, there's that passive income, there's the tax advantages. It sounds like there's a lot of opportunities to be able to fit this as a piece or a mechanism in your investment portfolio. And a follow-up question too on the returns. You had mentioned you had mentioned that mobile home that the typical return is like 15 to 20% at Johns Creek Capital. So if someone invested like $100,000, for example, they would be able to expect 15,000 in return. And when is that paid? Like how often is that paid? Walk us through that.
Right. So all of our investor distributions are paid monthly. So you get a monthly paycheck pretty much from us every month. The first year, the return on investment, um, the first year, there's a schedule, right? During the stabilization period where everything is getting stabilized and we're still, establishing the rules for management in the park initially, and then we take on a lot of front end costs. The first year is going to be looking at 4% cash on cash. So you will receive that in monthly distributions based on how the park performed the month before. So you'll be getting a paycheck from the second year. You're looking at usually around 8%. So it restarts the cycle where you will get 8% of your money the second year, and you will receive that through monthly distributions as well. And then the third year, you're more looking at into the 10 and 12, and then as the years go on, you have a higher return, and that depends on the deal, obviously. And what we do is we have a preferred rate of return system, which means is we have a hurdle that Johns Creek Capital will achieve. And once we achieve that hurdle, the profits will be split 70-30 once we hit the 8%. And it's a waterfall structure in the distribution system. So once you get to an 8%, it's 70-30, investors having 70, us having 30. And once, we jump by 4% each time, so 12% rate of return, you'll be 60-40. And when you jump to 16%, rate of return, cash on cash in the year will split to 50-50, and that stops there. So, and whenever we go into a second year, the clock restarts again. That means that even if we got a 16%, it doesn't mean that we continue to get 16% the second year. We'll restart at 8. But what that also means is that will probably achieve the 8% much quicker. So that would be how our deals are usually structured. And if in a case where the first year Johns Creek Capital, like I said, is about cash on cash is around 4% in the first year of this project cycle. In that case, there is a 4% of shortage. So what happens is that it's accumulated preferred return. So the deficiency, the deficit will just be rolled over to the next year, where we owe you the 8% plus the whatever is a 4% owed from the first year. So the investors can have peace of mind knowing that you'll be having your 8% per year at least. At the end of the day, we don't get paid until you get your 8%, and then we get the promotes where we split the profit once the returns jump to a higher hurdle. So it's actually pretty industry standard in the waterfall structure. So
and it gives the listeners more clarity and insight around what to expect, and if they are wanting to get into this industry and to look into investing into this type of strategy, then they can understand this is what to expect. It's not 15% right off the back, but it's going to be a waterfall structure, as you had just so nicely painted. So if the listeners had any additional questions, if they wanted to know more about how to invest in, mobile home parks or Johns Creek Capital, how would they go about getting in contact with you?
Yeah, so audience can just reach to our website at johnscreekcapital.com. Again, that's johnscreekcapital.com, and there will be a contact form which you can fill out, and I will be able to reach out to you, or you can email me directly at cdunford@johnscreekcapital.com. And also phone calls are welcome as well. Call me at 470-265-0911.
Oh, perfect. And I'll link that all in the show notes, guys, as usual. But Charlotte, thanks for coming on and shedding some light on this investment industry. And it's so unique. A lot of people don't talk about it, but it's such a, as you had mentioned earlier, a diamond in the rough, right? And it's like, this is something to look into and to research and to see if it's an option for you if you like what you heard today. So Charlotte, thank you so much for your time.
Thank you so much for having me. Great.
And guys, you know where to find me. It's at Financially Free Journey on TikTok and Instagram. I post daily tips and motivation to help you on your financially free journey. Until next time.